Namaste. Today we'll talk about banking for beginners. We all have some account or other in some bank or other in India. And for the people who are not well versed about the banking, we will touch about from the basics like deposit. We all keep our money in the bank. Keeping our money in our bank account is called deposit. So in olden days there was no banking, no bank. So people were keeping their money in their own home. They were holding it or keeping it idle. And it was number one risky, number two it was not earning any interest, number three it will be always tempting to take the money immediately when it is on our hand, number four anybody can rob it, anybody can misuse it. So to avoid all these issues, banking was evolved. And if we keep some excess cash, if we get some excess money in our hand, what we do is we go to the bank and deposit the money into our own account. This keeping the money in the bank is called deposit in banking parlance. So deposit is nothing but our money we are keeping in our own account in our desired bank where we are maintaining an account. So that is very clear. So depositing the money is called crediting the amount. That is also another parlance they use in banking. Like I have 5 lakh rupees credit in my bank. Means I have deposited 5 lakhs rupees in my account. Deposited again means I have kept my money in the bank. So if I keep my money in the bank in my account, that is called deposit. When I am keeping the money in the bank, it is called crediting the money. So credit or depositing the money is all our own money which we are keeping in our account. So that is called deposit. So deposit, as we all know, or some may not be very familiar, there are various types of deposit depending upon the nature of account which we are keeping. The common account which everybody is having is called the savings bank account. Savings bank account is nothing but account from where you can always take the money, you can deposit the money for your as and when you need to keep your savings. As the name goes, to save your money, you keep open an account in the bank and keep your extra cash. Suppose I am earning 1 lakh rupees per month, I need only 50,000. So remaining 50,000 rupees I am keeping idle at home. I am keeping in my account, which is called the savings bank account. And another point is remaining 50,000 also not going to spend on the same day. I may spend during the month. So after that, except say I keep 10,000 as cushion at home, remaining 40,000 also I go and keep it in my bank account. That is called depositing the money or crediting into the bank account. Credit, they give a challan for credit slip. They call it credit slip. Normal credit is loan, but here in the balance, when I am crediting the money, it is I am giving loan to the bank. Correct. So the bank is getting my money into their hands. That is why the credit term comes for when we deposit our money or when we keep our money to the bank. So I am keeping all the 90,000 into my savings bank account. So I have credited the money or I have deposited the money, as we say. Now I want savings bank account means anytime I can draw. Now there are various options like ATM is there, you can scan, you can transfer through your GPay or any bank, any through mobile applications. So this way internet banking has come. That we will go into about that in detail. But to start with, suppose I want some money, say 10,000 rupees I want now. So I go to the bank and I take the money from my bank account through there is some procedure. Accordingly, we take it. As and when I require, we can take the money from there. Now, to avoid frequent withdrawal, there is some restrictions. Say per quarter or per half year, each bank is having, as per regulations, only this much withdrawals are allowed or this much checks only are allowed. More than that doesn't mean that we cannot take. There will be some penalty. So we will go to that later. Now the main point is savings bank account is for us to keep the money anytime we want and anytime to take. So for any money which we keep at the bank, we get some interest. Interest is nothing but we are giving the money as a loan to the bank, right? When we keep our deposit in the bank, it is nothing but our money we are giving to the banker to use as whatever they want. Whenever we want, he has to return. That's all. So he will be earning something out of that. He has to return to us something. That is called the interest. So like savings bank account will have the least interest because anytime we can take the money. So other form of the deposit, if you want more interest, suppose you say you have got a bumper harvest of say 5 lakhs or 10 lakhs, you got some bulk money in your hand. So you will not be needing it day to day. You will not be needing in the near future also. You may be needing after 3 years or 2 years, not immediately. So that we don't no need to deposit in savings account, because savings account you will get yield. Interest is called nothing but yield or return or reward. So that will be very low, say 3%, 2%, 3.5%. It will be the lowest. So to earn more and to keep the money safe, we keep another deposit which is called term deposit. Term deposit is nothing but for a fixed period. So many banks call them as fixed deposit also. Fixed deposit, term deposit. So like that they call, as the name goes, it is for a fixed period. It can vary from 45 days, 3 months, 1 year, up to 10 years it can go. So here also, the higher the period, higher the rate of interest normally. So now banks also knows up to what period they want to keep. Say like for example, if it is 5-year period, the highest interest there they are giving. For if it is 1 year, definitely they will be all above the savings bank rate. If you are getting say 3.5% for savings bank money which you are keeping in as interest, for fixed deposit it will be more than that, 5%, 6%, 7%, depending upon the market condition. So meaning thereby, throughout the period of 3 years, suppose we have deposited the money 5 lakhs into our own account to the bank and say that we want to keep with you for 3 years. After 3 years only I need it. So they give you a fixed deposit receipt and keep that for 3 years. The 5 lakhs will be earning interest say at 6% throughout the period. So at the end of the period, along with the interest you can either get, or in between also every quarter, if you want, the quarterly also the interest money will be paid to us. That is our earnings. So here the earnings will be more, money will be locked there with the bank. Though it is called fixed deposit for 3 years, the regulations are allowing us to withdraw prematurely. Suppose I want urgently, I was expecting that only after 3 years I need, but there is an urgent requirement and need it within 1 year. Whether we can take, theoretically no, but practically yes, and law also permits, banking also permits. We have to go there and ask for premature withdrawal, because maturity is after 3 years, but I am going in within 1 year and asking for the money. So that is called premature deposit, premature withdrawal. So for that we have to give an application or give a request to the bank. So there, suppose instead of 6%, they will reduce interest. Suppose within 1 year, what is the interest rate applicable? They will find, say for 1 year it might be 5%, for example. So from that they will take a penalty depending upon the norms, 25 basis points or 50%, 50 basis points. Instead of 5%, they may charge us, they may give us 4.5% or 4%, and our money along with the interest and till that date at this revised interest rate will be credited to the account. That is called about fixed deposit. Savings bank account, there is no question about it. Any day you go there, take the money, next day you can deposit in the same account. Fixed deposit, not like that. Once you deposit, it will run through the term of the deposit. Like we keep it for 3 years, means that is called term. The 3 years terms you have kept, tenor they call it. So after 3 years only, normally we can take. If you are taking in between, you have to break the deposit and it will be closed. Again you want to deposit the money in the same account, you cannot, same deposit account we cannot create. Another fixed deposit or term deposit will be created. So like that we have various accounts. Suppose every month I want to deposit some money. This is lump sum deposit is called fixed deposit. Every month I want to say 10,000 rupees every month I am having surplus. Throughout the year, 1 year I want to save, so that it will be cumulative. So what that we do, like as I said, every month we want to deposit 10,000 rupees or give our savings are there, that money we want to keep in the bank. Either we can keep in the savings bank account where you will get only 3.5% interest, or every month you can go and give a fixed deposit or term deposit of 10,000 rupees. So every month when we do 1 year, 12 receipts will be there. Each will be maturing in different dates, correct? So to avoid that, the banks have come out with another scheme called recurring deposit. Recurring deposit, as the name goes again, repeating. Like we say in mutual fund, they call SIP, systematic investment plan. That is about mutual funds. Let us not complicate. In the bank, what we say, so every month I want to deposit 10,000. For 1 year I want to save. That is called recurring deposit account. There the period will be 6 months, 12 months, 36 months, so 24 months or 10 years, as the case may be. So we will take an example of 1 year. So I will go there and request for a recurring deposit account to be opened in my name. So they will create an account and they will give account number and passbook, everything will be given. So every month before the 5th of month or 7th of month as the bank's norms, every month on the given, before the given date, we have to deposit the 10,000 in that account. So first month I am getting depositing 10,000, that will run for the full 12 months. Second month I go and deposit in the same account, the same recurring deposit account, that will run for 11 months because 1 month has already gone. Like that, third month it will run for 9 months, goes on, and the 11th month it will run only for 1 month. After the 12th month we deposit the money, 1 month, completion of the 1 month, the entire money from first month to 12th month would have accumulated interest, or the end which would have earned money which will be more than the savings account, but the rate of interest will be like the term deposit account. So term deposit, how much interest we are earning, definitely it is better than the savings bank account. So that interest will be applicable for this, number one. Number two, the money gets accumulated. The full money on maturity will get, it can be used for some important purpose or for a planned expenditure. So that is called recurring deposit. Though there are three types of basic deposits which we can understand: savings bank account, fixed deposit account which is also called as term deposit account, and recurring deposit account. This is for the household saving or individuals. For business people, we have another account which is called current account. Whatever we personally saving as for personal use, they are all earning interest. Savings bank account earns interest, term deposit earns interest, recurring deposit also earns interest. That means they will giving reward to us. Current account, as the name goes, is better than the savings bank account. That anytime, any money they can deposit, any money they can withdraw. Higher the limit. There is no restriction like savings bank account. But the catch is, the bank will not give any interest to us. A business person, a company, an individual who is running a business, he can open a savings bank account. Current account. He can open a current account where he can deposit his day-to-day earnings, day-to-day funds. So he can draw the money by cash, he can ask for a draft, all those things. For his business purpose, when he is opening, that is called current account. There anytime he can withdraw. Withdrawal, there are many ways, like we said, through check, through direct cash, through ATM, through internet banking, like that various avenues have come. So normally through check, olden days only check was available. Through the check they can withdraw. Current account, they can issue the check instead of withdrawing and giving to somebody, a business person. He can issue the check in his supplier's name. So supplier will go there and collect the cash, or he will deposit in his own account. This way, banking deposits are called. How these accounts, banks operate, how these deposits are multiplying, we will see in the next video. Thank you.